Okay, everyone should be able to see my stuff here. Let's get the screen going. There we go. All right, if you can hear me, go ahead and type something in. Let me know. Let me know how hot it is out there wherever you're at for vacation. Let me know how hot it is out there wherever you are for vacation. Super hot. I got a super hot. Hi, Kevin. Good to see you. Abraham, we can hear you. We have super hot, 100 degrees, too hot to handle. All righty. Good. Hey, welcome everyone to the Hurley Financial Services Commentary for July the 24th out here in Utah. It's actually a state holiday. They call it Pioneer Day. I should apologize to you a little bit about this summer. I've just had a busy summer, so for the days I am unable to make it, I do apologize. Please check your email. You should see some cancellations if I'm not able to make it. With that said, I'm going to do things a little bit differently today. I would like some sharing. Please type in any and all questions you guys have. But I want to share a little bit about my story and the way I invest in the stock market. And it's pretty easy. I sold a business thinking I had, all right, let's just make sure. Yep. Thinking I had 4 years of savings. How long do you think 4 years of savings lasted me when I'm no longer working? When I'm no longer working, I have free time. How long do you think 4 years of savings lasted me? Abraham said 1 year. I had a not long. I like Abraham's. Any other clues? How long do you think 4 years of savings lasted me? About 2.5 years, right? And my wife was kind enough to say, hey, it's time for you to go start a new business, or it's time for you to go work for someone else. And I didn't want to do either. In all honesty, I didn't want to do either. I know starting a new business takes a huge amount of work. In all honesty, some people might say I don't work well with others. I just don't work well. I just don't work well with people that maybe I don't respect as much for the way they come across to me, the way they act like they know something that maybe they don't. So I went into trading education. And pretty simple. I did Optionetics, the full-blown program. Wasn't too impressed. Didn't get what I thought I was going to get out of it. Invest Tools, I took their beginner course. Wade Cook, who's now in jail, took me for $7,500. I did learn some good stuff from Spread Trade Systems. And I did Safe Option Strategies. So out of curiosity, if I stuck all this together, how much do you think that cost me? How much do you think all this cost me? Yeah, Mod just said 50K, pretty close to it. Because in all honesty, Option X was 25. I think it was 32 when it's all said and done. Invest Tools was about 2,500 bucks. Wade Cook was closer to 85-ish. Spread Trade Systems actually worked for them, so I got that for free. Safe Option Strategies, I worked with them to help create it. And, Abraham says how much time? So it's pretty interesting because when it was all said and done, Abraham, previous two educations. I spent about 5,800 hours. And I can tell you 50 grand can go up to about 280 and back down to 50. 20,000 can go up to 80 and back down to 15, but I took some out. So that was prior to my education. So I should say prior to education. I spent 5,800 hours making money, but giving it all back. And I'll be honest with you, it was spread trade systems, and the story's not 100% true, not 100% correct, but they had their Hawaiian Polynesian guy that did an example of collar trading, and I was hooked. It made sense. It said, hey, you know what? I'm not always going to guess right. And because I don't always guess right, if I add protection, as it goes down, I make money up. So it really was, boy, I wish I remember who that was. But it was at Spread Trade Systems, I learned a collar, where the key word here, I'm not always right. So when I am wrong, I can make some of the downward movement in stocks. So I'm going to say this. I can make some of the downward movement in stocks by using the put option as insurance. Because in the past, I've been a good stock picker. And I can pick some stocks that'll make some good money. What I couldn't seem to do is make it work. Keep the money I was making. So obviously it was time to change. It was time to make a different. I had to find something different, and I found it through, again, not 100% accurate, but I found it through a Hawaiian out in Hawaii that was the example for spread trade systems. He had an NVIDIA trade where he'd, put this protection on and it would fall down. He'd buy more shares, or actually he would just make up the money. And then for all intents and purposes, he'd lower his cost basis down to zero. And I really liked that he could protect some of the profits. So my wife thought I was crazy. In all honesty, my wife thought I was crazy. Why would she think that I was crazy? Because, and Abraham, I'm going to come back to that in just a bit. There you go. Thought that was crazy because the stock market is like gambling. She just like, oh my gosh, what are you doing? So I collar trade. I collar trade because if I am wrong, back to the audio there. There we go. All right, you guys should be able to hear me again. My sound was just lost, but it reconnected. Sorry about that, guys. All right, glad I'm back. But I wanted to make trading a business. And I found out that spread trading is too volatile for everyday people. And I found out adjusting doesn't always mean you make a profit. Plain simple. It is what it is. I mean, it's not as easy as people think. And so because of that, I felt I had to do something different. That's why I collar trade. My whole collar trading theory comes down to this. So I guess it's my collar trading rules, huh? Rules. You don't always have the stock, long put, and short call on at the same time. You can create exploding collars with a leap short call and leap short call, protective puts, and strangles or straddles. I use the rule of 300, but would prefer to have 1,000 shares of stock ownership always. Anyone know what the rule of 300 is? Anyone know what the rule of 300 is? The minimum amount of stock you should own is 300. Because if you're willing to collar trade a 35% drop, which can happen almost up to, well, let's see how it says. About the max that a stock ends up losing is about 35% on a bad earnings. So the whole idea, and the reason why I like to use 1,000 shares, how easy is it for a stock? How easy is it for a stock to lose 10%? Very easy, right? How about 20% through a 3-month period of time? Or even 25%, still pretty easy. Sometimes you don't see it go to 30, 35. But on those mathematical equations, so to speak, or probabilities, on 1,000 shares, right? And I'll even say something that costs like, I'll do $10 a share, like, let's do $10 a share for easy money. Like Ford, right? It costs you how much to get into it? $10,000, right? Not saying that's a small amount, but $10,000. So if you protect, right, at $10 a share with a long put, and the stock drops to $9, right? How many shares can I pick up? Let's do a 10% drop, right? There you go. 100 shares. 20% drop. Correct. 200 shares. Obviously, a 25% drop would be 250 shares, but I'd probably only do 200. Now, let's work those numbers with 300 shares. A 10% drop, right, gives you how many shares? There you're at. 20% drop, right, gives you 60 shares. A 35% drop only gets you like 95 shares. So it's much harder to pick up 100 shares and protect it with 300 shares than it is with 500, than it is with 1,000. Really, if I can't get into 500 shares, I'm usually not trading a stock. At 500 shares, it has to drop 10% twice for me to be able to pick up another 100 shares. So I do it a little bit differently, right? I trade a little bit differently, and I'm at 500 shares. I'm looking for two 10% drops before I add another 100 shares. Sometimes at 1,000 shares, it only drops 7%. It only does a pullback. Doesn't do a correction. Doesn't go into bear market territory. And I don't always guess tops of tops and bottoms and bottoms. So it's kind of funny. I can throw this in there. I don't always guess or know the tops and bottoms of stock movement. So I've got to have a buffer. I've got to have the ability to be wrong, but still do better than the market. Collar trading allows me to be wrong and still protect stock ownership. It is protection in a 2008 type of market, flash crashes, headline risk. I would also say collar trading is going to be trade war / tariff protection. And I can also go so far as to say excuse me as I sneeze into your ears. We haven't had a 20% correction, and we haven't had a 10% correction, right? A 10% closing. It market closes down 10%. 10% correction over 8 years, going on 9, and we are overdue for a significant correction. In fact, it's like every 8 years you get these big 35% pullbacks. This one, since a lot of our growth is stimulus, I think we could have a huge, huge pullback. I completely agree with Rand Paul. It could be a 50% correction. So as I was collar trading and finding out that I was doing okay, I started in 2006 a registered investment advisory service. Collar trading from Middle America, right? All it is nothing more than collar trading for people that probably, in my opinion, need the most, which is me. In 2008, I made between 8 and 18% return on investment, while most lost somewhere between 45 to 50%. Do any of you fall into that category? Yes, no, maybe so. There we go. More to the 50%, huh, Randy? Dave, over 50%. There's something important about that, because if you lose 50%, what return do you need to gain it back? What return do you need to gain back a 50% return? There you go. Two of you said 100% return, right? So if you take my returns over the years, compare them to anyone that was in 2008, they'll never catch up with me. They'll never make as much as I do, because they need 100% return just to get back to where I was already profitable that year. In fact, they need like 110% return to get to my low 8%. So those people will never catch up to the returns for anyone that started with me in 2008. Hold on one second. Now, something else to put into consideration. When I don't beat the market, what's the benefit of using me? What's the benefit of using me if I don't beat the market? Well, I would definitely hope you lose less, but that's not necessarily the benefit. There you go, protecting, right? If I don't beat the market, I should be adding more shares to your portfolio without asking for more investment. So everyone else, let me go ahead and take that one more way. Give me one quick second here. I can dollar cost average without asking for more funds to be put into the account. So if I was looking at stuff this year, oh, give me a quick second. I had some of it here. Why can I not find it? Because I don't have it here. Ford had 100 extra shares added to it. I believe we added 100 shares of Disney this year. Baidu has had 100 shares added to it. And I think, oh, there's one other one that I don't remember. American Outdoor Brands Corp has had like 300 shares added to it. So if I'm not beating the market, the S&P 500, by the way, that's what most of us are up against. I should be adding more shares into your portfolio or dollar cost averaging without asking you to have more funds. So here's the big question I hear. I want to do that, which means you need to get licensed and boy, that's horrible spelling. Get licensed, which are your series. Usually your 6, 63, and or 65, 66, and 7. You should also be licensed for health and life, so you can sell life insurance and annuities. You get a huge background check by the FBI/SEC, and they have access to all of your financial account/information. Not to mention, you are now civilly and criminally at risk of being sued and charged with a felony, as well as being fined, accounts frozen, and licenses dismissed by the SEC. And the funniest part, you can never satisfy everyone all the time. It's kind of a miserable job. Some of the things that come out of some people frustrate the living crap out of me. But on the flip side, every update in the stock market, for the most part, can be a day off for me if I don't want to try to increase the business and to I don't know, to spend more time where I want to spend my time would be one of the perks for the business. Now, a couple things to mention. If you are trying to time the market, thank you, Maud. If you are trying to time the market, you are playing a losing game. The market is untimable. With that understanding, any and all algorithms never work. There is no algorithm or probability that predicts the future of untrainable market behavior. Something else to think about. How much now is computer programming trading? Where you can have runs. On sell orders. You know what one of the funniest things is? Can someone tell me what is a stop loss? What is a stop loss? What is a stop loss? There we go. And Lance, I'm going to say this politely. You are 100% right and 100% wrong. A stop loss is a trigger to sell your stock. It is not the price that you sell your stock, because a stop loss is a price trigger to place what kind of order? To place a market. It's a market order that whatever the price is where you sell the stock. And what I see, probably on average, what I see is it'll work every 4 out of 5 times. It'll sell reasonably close, within 25 to 50 cents. And then the next one, you're looking at least a 10% loss, if not more. And then by the end of the day, that loss could be only a 2 or a 3%. I'm going to use most recently Netflix. Netflix, when it opened, most people's stop orders took a $50 loss. By the end of the day, Netflix was only down 23 bucks. Some of those stop orders fell in that $55 to $57 range. It was a bloodbath. Hence, I think stop losses are foolish. Lance just typed in, and again, I'm going to say this with all due respect, Lance. Sometimes they save you. I disagree. I think a long put that gives you the right to sell your stock, no matter what the price is, no matter how far it drops or comes back. You set the price that you set your selling of your stock at. You do not do that with a stop loss. Thinking a stop loss is protection is like thinking a covered call is protection. I learned a covered call is 1.5% to 2% protection on stock ownership. It is not protection. If you've got 98% of your value of your stock at risk, that's asinine to think that's protection. It's a 1 to maybe 1.5, sometimes a 2% credit against your stock ownership to give you time to make a decision. But under no circumstances is it a covered call protection on stock. The numbers are easy to use. Please don't think that it's ever protection, because it's not. And that's just common sense of doing your math. Risk. I'm going to talk about a little bit more about risk. Long call risk or single option risk. Every freaking penny is at risk. Short put risk. In all honesty, anytime you place a short put, you have the obligation to have to buy the stock. So on a short put, even if you took $2 of credit, and if you're obligated to buy the stock at $40, you've got $40 per share of risk in your position. Doesn't mean you can't lower that by putting on a long put, setting triggers and stop losses for selling out when you get hammered by it. But in real life, not theory, but in reality, every penny of that short put obligation is a risk to you. So as I got to this point, it is what it is. In all honesty, I've got some people in 2008 that $250,000 is now $1 million. I got some people that started in 2008 that will never leave me. With that said, also, I'm trying to double portfolios about every 4.5 years versus every 7 3/4, I think is what it is. And the neat thing is, when you get big enough, you don't have to take everyone in for a client. You can be stingy. You can say, you know what? Don't have enough money. And it's, some people are going to think that's kind of rude or selfish, but I have found it's usually easier to work with $500,000 than it is to work with 100,000. So it just gives you more opportunity to have something hit. A couple things I've learned in investing. Almost nothing works on my timetable. When I think I've got something figured out, I don't. When I know something's going to happen, it doesn't. And when I'm sure I've got a windfall, it rarely comes. Almost nothing works on my timetable. So, with that said, I'm usually not a spread trading individual. I've learned that I will spread trade within the collar trade, meaning long puts will become put calendars or bull puts. Short calls are turned into bull calls. Protective puts are helpful in bullish markets. I hate capping profit potential with short calls. I love being able to be like Warren Buffett. Oop, let me get that turned off. Sorry, guys. Love being able to be like Warren Buffett and add more shares without having to ask for more money. And most importantly, I like knowing that most of the time, a crash will not lose half my money. You know what? I'm going to take that out. I'm just going to put it like this, that a crash will not lose half my money. Someone just typed in, buying insurance is a cost risk. Also, and if it repeats itself along the time, if your timing is not good, would you agree? I would disagree 100%. Because something else I've learned, Abraham, is that my probabilities of significant stock price movement happen around earnings. And by protecting, can't believe my spelling's so bad. And by protecting 2 to 3 months out in time, to avoid volatility crush, keeps timing out of the equation. I'm not always protected. For example, I have a lot of my protection right now out to August and September, which will not protect me through October and the start of our next earnings. But the probability of significant stock movement occur around earnings. They don't necessarily or rarely occur around Bollinger Bands that are broken, because that's happened prior due to an earnings event. It doesn't happen around crossovers for stochastics. It doesn't happen on balance volume. All those three are all related to a significant 1, 2, or 3 day move, which 90% of the time is earnings, if not more. So what if it keeps going down, right? There's the question. What if it keeps going down? What if we run into a Bear Stearns? Because that's probably my biggest brag story that I have. Kevin, here's $1 million. Get me into Bear Stearns. Whoa, you got to be kidding me. And we got into Bear Stearns at 109. By the time I could add long put protection, so let's just call it what it is, right? Let's call it, am I spelling that right? Was that right, Bear Stearns? Is that spelled correctly? Let's just name it BS, right? Thank you, Mod. $139 years, increased its dividend. Not going to go out of business. When I got in, it was trading at 109. And the at the money price to buy long puts as a second order was $100 for a cost of $17. How much could I lose in this scenario? $26 a share. Very good, Lance. Cost of the long puts is $17. $9 I was unable to protect. We were going to lose $29 on $1 million. A week later, I added $80 long puts. And I'm pretty sure they were $26 a share. Nope. $27 a share. And when he could finally put more money in, at $40, I added long puts for $19 a contract, which is what it should be. And then, if you remember, they were frozen, liquidated, and sold at, anyone remember how much? $3.65 a share. And I still remember the call and hearing, oh my God, what have I done? How much have I lost? And I kind of chuckled because on a company that went out of business, that their price was frozen, if they had liquidated and you couldn't sell for $3.65, I would have made $220 a share. Not bad, not bad, not bad. But it would have also cost me 26, 27, and 19, 53, 72. So I would have only made about $28, 28% on the return. And what really happened, you had to exercise. Had to exercise the $100 long puts for $100 per share. The following day, because you had to wait for the exercise and for the money to clear, right? Following day, bought BS at $365 and exercise at $80 a share. Following day, bought BS at $365 and exercised at $40 for about a 28% return on investment on a company that went out of business. And that's how you do it. My claim to fame. What questions do you guys have? What questions can I answer for you in regards to anything today? Would I recommend other people getting into the managed money business? I would not. And the reason why is because most people think they've got a trick or a secret on how to make money. The golden goose, the magic bullet. So Lance, I've kind of picked on you today, and I'm going to apologize, but let me tell you how it is in real life. There is no magic bullet. There is no magic secret. There is no algorithm. You're either awfully damn lucky, or you've got a system that minimizes the losses, puts that money back to work for you so you can make more as things go back up. There is a criminal responsibility by being a fiduciary. So, understand you are taking everything you've worked for your whole life is at risk to be sued. Yes, you can have surety bonds and trusts that add some protection, but also you can do criminal time for trying to do your best effort for someone. But please don't think because you had 1 or 2 good years that you can be successful at investing. Don't believe in a bullish market because you're making money. You can always do so in a bearish market. What we do is not easy. And you have to weigh the risks against the rewards and find out if the risk outweighs the reward potential. You also should always start with a minimum $5 million. It's not something you can make a living at with 2 or 3. It's not something I can make with 5. I need to have 10. Having 23 makes it a lot easier. On the comment, so Bear Stearns is a trending trade basically since you added capital to the trade and not just collar, right? It was a collar trade, Abraham. It was technical crossovers before an earnings, so I added protection. I probably should have added a short call, but with the volatility in place, the amount that it could have bounced back, it didn't warrant a short call. And as it kept breaking support levels, which is what I learned in 2008, as stocks kept breaking support levels, you just added more capital or another contract to the trade. Apple was another one. Nothing like getting an Apple at 205, buying a 200 out of the money long put, having the blasted thing go down to 165 in a couple weeks. Putting protection at 160, having it go down to 120. Being able to make $1.55 for every dollar on the way down through some of the way. But I don't want to mince words. I primarily collar trade because I am not comfortable in thinking I can outguess or predict the future. And because I'm not comfortable believing I can predict or outguess the future, I collar trade as much as possible. And my collar trade is because if I'm wrong, I don't want to lose everyone's money. Lance, did I answer that question? Abraham, did I answer that question? What other questions do you guys have? What other questions do you guys have? If I don't see anything else, I hope this was helpful. I will get this up and available for you. Do you use more than one brokerage firm? I actually use 3, but probably 90% of my business sits in E-Trade. I use Interactive Brokers for my international group, and I do still have a brokerage with Money Block, but I have not actively used that for anything other than institution 401k type of money. So I actually use 3 brokerage houses, IDA, but 90% sits in personal. Well, I guess that's not. 13 million sits in, I'm gonna take that back. 12, about 11 million sits in E-Trade, million and a half, almost 2 million sits in Interactive Brokers, 13 sits in institutional 401k type of money in Money Block. Really, it shouldn't be important what brokerage you use. You just need to make sure that you can easily place your trades. I'd recommend for individuals, TD Ameritrade works. Charles Schwab with Options Express works. There are numerous ones you can use, but I would go with ones that are more well known than the new startups. Any other questions? I was going to say, if there aren't, I will get this posted rather quickly so that we can have access to it. Guys, I appreciate you being here tonight. Hopefully it was good just to share a little bit of my thoughts with you on how this worked. I look forward to seeing you guys again next week. And with that, have a wonderful evening. Bye-bye. Good night.